Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from MPIinvest.com. Of course, as we all start this podcast with the market update, so naturally talking about Indian markets yesterday markets were really volatile. That was expected, being a bank nifty expiry, but interestingly, yesterday the volatility was caused by Reliance. So yesterday we could see the markets actually being bearish in the opening, and from there it was completely volatile. It came down, breaking the day's low, and then from there went up all the way up, and then from there a continuous fall. But then the last few hours we could see the markets actually showing a total turnaround and breaking the upper level and going up. In fact, it was of course looking very bullish, but then we were also expecting a small gap up today morning, and that's exactly what's kind of happening. So what happened yesterday is something that we need to understand. The markets, like I told you, if you remember yesterday morning, what we discussed, people are just waiting for a reason to sell, and they need a reason to buy. So neither they have a big reason to buy, and neither they had a reason to sell. So we could see the markets kind of getting into a total mess because they don't know what to do. So that was exactly what was happening in the market yesterday. But then, of course, there was some positive news from Reliance, and Reliance did move up. And the best part was yesterday, we could see some movement in short covering in IT sector as well. So why am I talking about Infosys and TCS today? Well, their results are coming today. So it was always an expectation that these companies are not going to do great this quarter. So expectation, the market doesn't have any expectation from them. However, there are times when they've given surprises. In fact, Mr. Narayan Murthy from Infosys is very famous for this. He always gives a very low target for the next year, and announces a low target, but then gives out big returns. So that is something that he's known for. So Infosys being Infosys, there could be chances of a surprise, and if that surprise comes in, naturally markets will see a big short covering in the IT sector. Now, question is, should you stay invested if you're already invested? Now that again depends on you. Now, if you are a long-term investor who you're handling a portfolio yourself, then of course it makes sense to hold these stocks because they will easily give you 10 to 12% return every year, so which can definitely beat the FD returns. So that sounds good. Even I've been holding it myself when I've been managing my portfolio myself. But of late, after I switched to small case and intelligent advisory portfolios, I have actually seen a totally different scenario. What is that? Well, these companies, Infosys or TCS, have grown so big, they cannot grow more than 10 12% a year. So, in that case, these are not stocks which are actually going to be creating wealth for you. Of course, they do beat the inflation, they do give you slightly higher return than inflation. So, that means you're getting a decent return on investment, but they are not wealth builders. So, if you want to build your wealth, you need to invest in companies that have a lot more growth potential. So, Infosys being already a big company, how much further can it grow? So, there is a lower chances of it going much higher. But if you want to be having a safe investment where you don't want much volatility, volatility means nothing but the price fluctuations. So, if you don't want all that, of course, you should stay invested in TCS and Infosys. Just keep your eyes closed, keep investing money in SIP more into these stocks, and they will give you easily 10 12% return. But then, if you want to make money, then you need to go for a great small case or a great intelligent industry portfolio, which is managed by very expert, with a very high expertise by people who have beautiful knowledge about the market, who are SEBI registered, government approved, and these people have their job watching the market and the companies on a daily basis. And these are people who not just make a portfolio for us, but they also interact with these companies and know most of the details about these companies before they invest. So that analysis benefit, if you want, then you need to select the right small case. Now, of course, we've got so many small cases, we've got so many portfolios, which one to select from? That's exactly where MPI Invest comes. So we help you choose the right one. All you need to do is schedule a meeting with us at this website that is there on the scroll, that is mpiinvest.com, and we help you build a beautiful portfolio in the equity market as well that can give you more than 20% returns probably. In fact, if you look at my personal portfolio in the last 6 months invested in a good small case has given me a return more than 25% just 6 months. Isn't that amazing? Of course, markets have rallied up really well, but along with that, it was the selection of the beautiful portfolio which has made the difference. In fact, talking about that, I remember many people invest into mutual funds. You should. Mutual fund SIP is the best way to do your investment. But then, do you have to keep that money then and there? The most important thing is shifting it to a better place when required. What do you mean by better space? The most important thing to understand, the better place is moving into something like a focused portfolio. Now, this again depends on your risk appetite, but if you are okay to take little risk, now what do you mean by risk? You should be having a long term view, and there might be fluctuation, but on longer term, you'll get good return. So, if you need that, you have to move it to the right product that can give you better returns. Just for example, at this point of time, we have launched the brand new Sundaram Alternate Investment Fund, which is investing into real estate sector. And you know the returns that's coming in there, a fixed return of more than 14%. And the best part is, once your investment is done, you get the interest quarterly basis. So best part is if you invest about 1 crore into this fund, you get more than 3 lakhs every quarter into your account. Now, which real estate investment would give you such a return? So similarly for equities, there are amazing equity portfolios which can give you more than 20-25% CAGR. So if you don't move it to there, mutual fund will grow your money for sure. But if you have more funds, better switch to something else which can give you better returns. And to select that as well, we help you. Now that's a different thing, talking about equity and other investments, but then talking about the market today. Well, today is expiry, and being the expiry, naturally markets would continue to be volatile. But then I am expecting the market to kind of open slightly higher, and then there might be a small fall. And after that, probably the market can take support and start recovering. That could be the expectation as of now. Well, that always it is very difficult to predict the market for the day. But then, of course, on a longer term, markets are of course looking positive still. So that's something very good. So based on that, first thing I would say is, if you're a trader, yes, probably not a great time to be learning to trade. Or if you're learning to trade, do trade with very small capital. Markets are really volatile. But then, if you're an investor, just close your eyes and invest into good SIP and make great returns. So, of course, I might have repeated this 100 times, but this is the key to growing your money. If you don't do it, if you miss the opportunity, you will definitely think about it and feel bad later. So now, the next important part to look at today, what is the important activity? So first two things I told you, Infosys and HCL, sorry, Infosys and TCS results coming up today. So that's something on the major focus. On the US market, the US CPI, that is the inflation data, is coming today evening. So when US inflation data is coming today, the focus would be majorly on that, because again, people are looking at when the US central bank would start having rate cuts. So if the inflation comes lower, then that would be adding positivity to the market. But then if you see, there are high chances that at some point of time now, we will kind of see the CPI fluctuating slightly. So I would be keenly watching on that. I'm not going to hold any trading positions tonight because of this. So let's see how things go. But however, I'm expecting things to go positive. There are high chances the market can see a big gap up tomorrow if US markets see a rally today. So that's something that could be on the cards. So be careful when you're trading. So that's it for now. I think we've covered it all for the day. Let us discuss more details tomorrow morning when we catch up again for the podcast. Goodbye. Have a great day, and wishing you a great expiry. Bye. Hey, before that, I keep forgetting. Do press the like button if you love the content that we share, and do share the podcast with your friends and relatives. Goodbye.